Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And in tonight's video, we're going to cover all the trades that we made for Wednesday, March 18th. Get my days all mixed up with expiration week. So basically it was about just kind of cleaning house and continuing to close out, adjust, roll, hedge, do whatever we need to do heading into the last couple days of expiration. So a lot of what we're doing right now, again, is cleaning house, closing out trades. You can see the bulk of what we did today was closing trades and or adding adjustments. So let's actually go over the adjusting trades to start with. And I actually want to start with the IWM vertical spread, which is kind of towards the bottom here. So this is a really interesting trade only because we're going to be doing a case study on this one, which we'll add to the membership area over the next week. But we had originally entered an iron butterfly in IWM, took in a massive credit, and as the market started to move, we hedged that position by rolling up one of the sides. And so we rolled one of the sides closer to the market, took in an additional credit on the position. Now, doing that was a really good idea because after that adjustment and then closing out this part of the position today, which is basically the only position left in the money, everything else should expire worthless, we only took a $5 loss on this trade. Now, a $5 loss isn't that great because it's still losing money, but when we rolled up that contract, we took in $70 of extra premium. So what would have been a $75 loss had we done nothing at all turned into a nice little small $5 loss on the position move. And again, all we were trying to do was take advantage of the fact that IWM was continuing to move higher. And so as it has moved higher, this gave us an opportunity to add that hedge to the trade. Right, so as the market just continued to move higher against our position, at least that one position that we had in IWM with that iron butterfly, we just continued to roll and hedge this position, which really helped out given the fact that implied volatility dropped all along the way, which is what we wanted, but the stock moved against our position. Now, we did have another profitable trade in IWM. We did end up closing out our calendar spread, though a little bit early. We probably could have waited till the Fed made their announcement. Had we known that obviously the markets were going to rally much higher, we would have probably made another $30 or so on this trade, but took a nice little small profit on this tiny calendar spread that we had. Again, trying to hedge our original bet with the iron butterfly. We traded a long call calendar into April and March at the 125 strike, and so you can see that the stock ended up very, very close to that 125 strike as we headed towards expiration. So that particular trade ended up working out quite well, even though, again, implied volatility between the time that we entered the trade and the time we got out of the trade really didn't go anywhere, really didn't rally too high, but that gave us a great opportunity to add a little tiny trade. And we'll probably look to do something very similar in IWM here coming soon because implied volatility is back down at the second percentile and looks really, really low right now, and we just assume that at some point it's going to move higher. So we'll probably try to reload a trade like that, trade a calendar again, covering the next 2 months. Something on the call side, played a little bit directional, and just assume that the market continues to rally higher. A couple trades that we closed out of today. We'll skip around here a little bit. We're going to do the EEM ratio spread. So this was a trade that honestly was going to be just a very small winner, like a $6 winner. And today, with the markets rallying pretty much across the board after the Fed announcement, came into a range that gave us an opportunity to close this thing out at a profit. Now, this confused a couple people because it is a buying trade. We are buying, but we're buying for a negative debit, which means that we're effectively buying for a credit. We're getting paid to buy back this position because of how pricing works out. And this is the really cool thing about ratio spreads or back ratios, however you want to call them, is that you can enter these trades for a credit, which we did. We entered this trade for a $6 credit, and we also exited this trade for a credit. Ideally, we wanted the stock to close right around 40, and you can see that EEM, with the market rallying today and everything else, closed a little bit above 40 today, up about 2.25%. Right, so you can see that it had such a really big day and actually finally kind of moved into the range that we wanted. We wanted the stock right around 40 or so, anywhere between about 40 and 41, and it really didn't happen until the last 2 days here until expiration. So this really proves the point that sometimes you just got to hold on to a lot of these positions before that last kind of time at expiration. Now, another trade that we got out of today, or two other trades that we got out of today, are trades in GLD. So our iron condor for March that we have hedged once got out of that trade. We bought back basically the side that was completely in the money, and that was the 126, 121 put spread. We bought it back at full value, meaning full loss on that particular spread. Now on the overall position, after we made all of our adjustments, we only took a $62 loss. So again, we were able to reduce our risk by making adjustments to this iron condor that we originally had in GLD. And today we also closed out of our position in HAL. Now this position really sucks, to be honest, because we had hedged this trade just yesterday, assuming that HAL was going to continue lower through expiration. Then obviously with everything turning around, we ended up closing out this position at a loss, not really intending on this. I was hoping that actually this call spread would actually expire worthless, but that's just what you get sometimes. It turns around on you really fast, and it definitely sucks. We took a $136 loss after the adjustments that we had made, which didn't really work out in this case. So as you can see, sometimes the adjustments work and sometimes they don't. With HAL, the stock was definitely up really big today with the rally in oil and everything else across the board. All right, so you can see obviously here that the stock just, kind of rallied into the last day here, and nothing that we really expected to happen, but it is what it is. This is part of trading, and unfortunately we were not on the right side of that particular trade. Now, the last trade that we did get out of today is a trade in eBay. This is just a partial exit, exiting the side that was in the money. Or no, I'm sorry. This is a hedge trade that we added today. I'm sorry. We actually rolled down our call side that was short, our short 60 calls. We closed out that side and rolled down to the 58 calls. As eBay was heading lower towards the early part of the day, we were able to roll this down for a credit. It's since moved back up, which is okay. We definitely want the stock to settle somewhere between 48 and 49, and it's sitting, 58 and 59, and it's sitting right inside that range right now. So the ideal situation is for eBay just to close tomorrow right between those two ranges, 58 and 59. The stock's sitting right in between that range right now. So everything looks good right now, and that would obviously reduce the potential loss on eBay dramatically if the stock closed inside that range. So again, that's what we did with the hedge. We just rolled down simply the 60 short calls that were already profitable, closed out that side with a profit, and now have rolled down closer to the 58 calls. As always, I hope you guys enjoy these videos. I know that expiration week can be a little tough, so just make sure that you take your time with your orders, go through all of your positions. As always, if you have any comments or questions about any open positions that we have, please add them right below this video so that everybody else can see the questions as well, because I'm sure there's more than one of you out there that have the same questions as we head into expiration week. Until next time, happy trading.